margin. They are lagging.
Gordon, $24. $24. Come on, Gordon, $24.
It's going to get there. When it does, we'll have you on to say congrats.
Oh, come on, $24. Hatem?
I mean, it's silly. I mean, the company's doing $100 billion in sales and 18% margins. Come on.
Tesla just had much better than expected earnings. This has led to a sell-off in Tesla stock, which is not too uncommon. The bears think that they know everything and that they have won this battle, including Gordon Johnson, which has a $24 price target on Tesla stock, and just did another interview with TD Ameritrade, where even the host of that interview is calling Gordon Johnson out. Sounds like he's smoking on the funny stuff. At least a lot of the bears are. Here in this video, we're going to talk about Tesla and what's happening currently, what we can expect to happen over the next coming days, weeks, and months. Because this is not the dip that keeps on dipping. The earnings were too good. The path ahead is so strong for Tesla, it's hard to be negative, and you're really far-reaching if you are negative on Tesla. Well, there's a couple specific catalysts that I think you need to keep on your radar that nobody is necessarily talking about right now. We got it all for you here in this video. I'm not going to bore you with a super long intro. Let's just get straight into it. I want you guys, though, to subscribe to the channel, hit the like button if you guys want to stay up to date with everything Tesla every single day, as well as the broad markets. You probably know the spiel by now. But I want you to comment down below. What do you think's coming for Tesla over the next days, weeks, and months?
Hey, Nicole, thank you for having me. Listen, it was a great report. They've reached $25 billion in revenue, almost at least. So they're like a $100 billion run rate. That's a very exclusive club to be on. Margins are good. I expected them to be a little bit less, but they came in at 18%. So that's also very good. And really, they're growing fantastically well, almost 50% top line. So I don't know what's bad in this report.
Okay, so the first thing that Gordon's going to say is about the margins. And Gordon, keep it short so we can have a nice discussion. Go.
She already knows what he's going to say.
Go ahead, Gordon, and let's hear your thoughts.
All right, so I think where the bulls are dead wrong is in the auto industry, you had a temporary chip and supply chain issue where you had shortages in 2021 and 2022. We know that used cars are selling for more than new cars, right, which is an anomaly. And that allowed Tesla, who was willing to cut corners on chips, CNBC did a spread on this, to have artificially high margins. Now their margins are regressing back towards the mean. Their operating margins were 24% in the first quarter of 2022. They were 9.6% last night, down from 11.8% in Q1. So it's just not the company that people thought it is. Their earnings profile is much lower, and they're still cutting prices. So that's the problem, and I think that's the story for Tesla in 2023.
Look, I mean, at this point, yes, the valuation certainly seems very high. The prices they cut, Ford has been cutting prices, but they are creeping a little back higher. Hatem, let's kick it off. What is it about Gordon, what he's been saying? I mean, we know that the factories, he said, Elon Musk said that in the third quarter, production may be down because they've been doing some factory upgrades. You really like what they've been doing in Berlin and Austin, for example. Hatem?
First of all, the margins are going down because Tesla is investing heavily in its growth. I think that you want a company that is a growth company to be investing and really creating new products and batteries and chips. They just filed in Berlin for a new plant that's going to manufacture over 1 million cars in Europe. So if you think about that, currently Berlin does, I don't know, 200,000 cars. So I think the growth potential there is really tremendous. And as far as what Gordon said about the chips, Tesla is also investing, they said, I think over $1 billion in their dojo and their chip manufacturing. So from an AI perspective, it's probably the only company that really has a true AI or solution for self-driving car that is really sustainable and that will continue for a long time.
And so, Gordon, I know that you're not so trusting on the chips. You've also often said that you're not even a believer in the fact that they are making batteries. You don't believe really in the self-driving, right?
Well, they're making batteries, but everything they said at Battery Day, we now know is a farce. Listen, when people like Gerber Kawasaki don't have models, they don't understand what's going on. Tesla.
They don't have models. This guy has been short and he's pissed off, okay?
Tesla's other income was a $370 million benefit this quarter to the bottom line.
Has or doesn't have.
The quarter, they would have missed numbers. If you look above the other income line, their operating income was down 3% quarter over quarter, 10% year over year. Listen, this is no longer a growth company. It's an auto company.
So Tesla's other income, right? Their solar, their other ventures, it brought in some money. And he's mad about that. And Tesla's not a growth company because other Tesla ventures besides just the core auto business have been making money. He's smoking something.
86% of their revenues from selling cars, 98% of their gross profit from selling cars. What auto companies have to do is cut the price to move units. 2,000 auto companies, Warren Buffett made this point, 2,000 auto companies emerged in 1905. Nearly all of them went bankrupt. Right? Why? Because it's highly intensely competitive.
And the only 2 out of 2,000 that are still here today that have never went bankrupt, can you guess who they are? Ford and Tesla. That's it. So why are you making an argument that actually looks good for Tesla?
Capital intensity, and Tesla is being shown to be an auto company. And no matter what Gerber Kawasaki says with respect to how great they love the company, margins are collapsing. They're going to continue to collapse. And the reason why they produce more cars than they've sold now for a record 5 straight quarters in a row, and their production is going to be down in Q3 is because they have a demand problem. They're getting crushed in China, market share 30% to 11%. They're getting crushed in Europe, market share from 30% to 15%, and their market share is falling in the EU. And again, now that we don't have supply chain issues, they're suffering.
Okay. Let me jump in here because the first thing is I'm going to say is how do you know what models Gerber Kawasaki has and does not have? That is you can't assume anything like that. However, I'll let that go and say, look, when you talk about market share,
they're not even going to unmute him so he can even speak. Look at this.
They're suffering.
Okay. Let me jump in here because the first thing is I'm going to say is how do you know what models Gerber Kawasaki has and does not have? That is you can't assume anything like that. However, I'll let that go and say, look, when you talk about market share, Hatem, there's no question that the competition has been increasing. Do you think that they can continue to be the leader that they are? Look, there are many people who think it's overvalued, but does $24 price target and a sell rating seem ridiculous to you?
Thank you for saying that, Nicole. I don't know what Gordon is talking about models. I don't think I need to showcase any kind of our models. But ultimately, what Gordon is looking at is completely wrong. What Tesla is trying to do is trying to go after the whole car market, not just the EV market, and that's only 6 or 7% currently of the 15 million cars that we sell in the United States or 100 million globally. So if Tesla has 60% of that market, but that market itself is growing. So we don't need Tesla to have 70% of the whole market. So I think what's missing here is the fact that Tesla, the Model Y, has been really the top selling car basically everywhere. So the growth story here is really just getting started, and they have the best battery technology. They have the best software. So they're really the top dog no matter how you look at it.
Okay. Gordon, Cybertruck is going to be produced in high volume next year. Final thoughts here, Gordon.
So we don't know if it's going to be produced in high volume, right? It's 3 years late. They were supposed to be producing high volume this year. Now they shifted it to next year. But I just want to highlight something he said when he says they lead everywhere and they lead in batteries. That's just not true. They don't lead in China. That's BYD. They don't lead in Europe. That's VW. And now you have Ford and GM coming.
Volkswagen in the EU just shut down one of their EV plants because they're not selling electric vehicles. Well, they technically did a temporary layoff that they hope will not be permanent. We reported on that about 2 weeks ago, give or take. Tesla is eating everyone's lunch. and the Cybertruck. He's not going to tell you this, at least Gordon Johnson is not. The Cybertruck has 8 times the amount of pre-orders than the Ford F-150 Lightning. 8 times. Now, some of these are obviously going to fall out. Some people are going to cancel last minute. That could be as expected. Either way you put it, you have 2 to 8 times, I would imagine. Probably call it 5 times to be conservative. The amount of pre-orders for the Cybertruck than you have for the Ford F-150 Lightning. Just, it's kind of comical. He's so short, he can't see the bullishness right in front of him. And that's the case for a lot of your bearish analysts as well.
With respect to, the final thoughts. Look, Elon Musk is telling you they're going to produce less this quarter, right? That's a big problem. And he's telling you they're going to continue cutting prices, which they've done. You don't cut prices. CarGurus has Tesla's prices down 35% over the past year. The average car is down 5%. GM's down 1%. Ford is up 1%. So they're cutting prices far much more than the competition. The reason is because people don't want to buy their cars. They have 1.67% share globally, 4.4% share in the U.S. This isn't a leader. They are a laggard.
Okay, you had to tell him about the margin that you were looking at, the X-Auto margin, quickly.
I mean, 18%. Come on, Gordon. What are you talking about, buddy?
She's like, tell him he's wrong. She is, yeah, she's pretty cool in this interview.
It's gross margins of automakers. They sell direct to
She loves this.
the customers, which means their discounts are in SG&A, whereas other automakers' discounts are in gross margins. Look at the operating margin. They are lagging.
Gordon, $24. $24. Come on, Gordon, $24.
It's going to get there. When it does, we'll have you on to say congrats.
Oh, come on, $24, Hatem?
I mean, it's silly. I mean, the company's doing $100 billion in sales and 18% margins. Come on.
Where's the real value of? Where should it really be, Hatem?
Listen, they're a software company. We haven't seen what the potential is of full self-driving. We haven't seen what the potential of this AI revolution. They're spending a lot of money in there. The Cybertruck, yes, they're not going to produce a lot of them, but this is going to be also another top product. I think they're going to sell hundreds of thousands of it, and ultimately, this will own 20% of the whole car market.
Okay, let's leave it right there. I like the bull bear debate. Thank you both very much.
Yeah, she was loving that. That was pretty cool. Gordon Johnson, I don't know if we really have to go over this. I think it highlights, though, how wrong some people are on Tesla. Like, none of what he said makes any sense at all or is true. This is where you are going to profit massively as long-term holders. Gordon Johnson has publicly been short on Tesla in the past. Odds are he's still short on Tesla. And these guys will continue to lose money until ultimately they get burned so hard that they have to cover on those short positions. Maybe when Tesla is $1,000 per share. We have some other clips that I want to look at as well here in this video, like an analyst that says Tesla stock is undervalued, again, in lines with what we have been saying over the past couple of weeks. But I think another big factor that a lot of investors are not really looking at in the right light, I guess we can call it that, is interest rates as well. Interest rates have went absolutely insane. Now, what do higher interest rates do? It makes your long duration growth less attractive. That's a big reason why like an Apple or Microsoft has done so well in 2023, is well above its all-time highs we've seen in 2020, 2021, or 2022. They've absolutely soared. It's because they're not really growth stocks at this point. They're more of a value trade. They're cash positions during a time where we might go into a potentially hard landing, recessionary economic outlook. Well, those are your kind of stocks that people rush to. Now, when interest rates are 5% and even higher on some of your shorter term bonds, well, that takes money away from long duration assets, as I previously just said. But it also affects the auto industry harder than any other industry because it makes things less affordable, as Elon said just on the earnings call. Now, we're at the end of the rate hiking cycle. Maybe we have one more left. Not a big deal. Maybe it's two. Not a big deal. As long as inflation does not reaccelerate, we're basically at the end. So what it means once the Fed does stop raising rates and ultimately start cutting rates, one, that's a big boost to Tesla fundamentally, but other automakers as well. That's a huge positive. That's great. It's going to be more affordable to get into a new vehicle. That's a overall positive. Now, it's also going to allow for a little bit of that uncertainty to go away. Tesla stock has been plagued by uncertainty about where margins are going to go, where demand is going to go. A lot of different areas of uncertainty, and a lot of it has to do with the overall economy and where the interest rates are. But it also will allow Tesla to see a higher valuation when rates are lower. Because, again, if you don't have a 5% yield to put your money in, then it makes a little bit more sense to, go ahead and buy some of your long duration assets. That's why your longest duration assets, your highly unprofitable growth stocks, did so well in 2020 as well as 2021. There was no other alternative. It's called TINA. That's the abbreviation for there is no other alternative. So you had to invest in long duration growth stocks. Well, that's going to be a massive tailwind to Tesla, as Tesla is probably the definition of a long-term growth stock. And there's not too many out there that have promising futures the way that Tesla does at the size and scale of Tesla and the relative safety. It's highly unlikely that Tesla goes bankrupt to this point or sees a real bad hardship if there's no recession. If other companies are fine, odds are Tesla's going to do much, much better. So hopefully this makes sense. And I think once we get to the end of 2024, this is going to be a much bigger positive tailwind to Tesla's stock as we get closer to the first rate cut. And the first rate cut should do wonders for Tesla. But it's not only that. It's also the Cybertruck. Now, investors were quite disappointed we did not get an update from the Cybertruck on Tesla's earnings. Now, I'm sure Tesla's trying to figure out the final pricing for the Cybertruck, and they're trying to redistribute their tools, their assembly lines, to be able to produce the Cybertruck in the volumes at which they would like to. So ultimately, I don't know if Tesla knows where their volumes are going to be or where their final prices are going to be on the Cybertruck until they start rolling a couple more off the assembly line, in which we just seen last weekend, they produced the first Cybertruck off of the assembly line. Now, the Cybertruck has 8 times the orders of the F-150 Lightning. But what this is ultimately going to do, it has very little to do with the Cybertruck. The Cybertruck is advertising to a massive degree, and Elon is not stupid. He did this for a reason. Some people are going to love it, some people are going to hate it. People I have talked to personally that know nothing about Tesla, they like the truck just because it's unique. People like things that are unique, and there's a lot of examples of this. Well, odds are if people don't exactly buy a Cybertruck, they could go out and buy a different Tesla model. And just the overall production of the Cybertruck is going to add to a lot of potential profits for Tesla as well. As well as that, Elon announced that they are in conversation to license their full self-driving to a major OEM automobile maker. Now, presumably this is either Ford or GM. Could be Toyota, but he said a major OEM producer. Odds are probably a Ford, if I were to imagine. Now, why do I say this? Well, if you can't produce a software that is equivalent to full self-driving, it's like one of those things you almost have to do if you're a car maker at this point. That's where things are going. You have to do it. And just like superchargers, well, it was a lot cheaper, better alternative to just make a deal with Tesla to use their already existing infrastructure for superchargers. Well, it's going to be equally, if not more convenient for someone like a Ford or a GM to also license full self-driving. Now, whether this comes in form of subscription or just a one-time purchase of maybe $1,000 or $2,000 or $3,000 that Tesla could make off of Ford or GM vehicles, whoever they partner with, this is all going to be bottom line profits, damn near. About 90% net margins here. This, is going to totally change the game for Tesla's fundamentals. Now, again, back to what I said about interest rates. The markets will be able to look ahead and look at some of these future things coming and assess its actual value. Right now, there's no value being added for full self-driving licensing. There's no value being added for potentially what the Cybertruck does to Tesla sales. There's very little of that is actually being currently priced into Tesla stock because interest rates are so high and there is an alternative. So here in the short term, the next couple of days, sure, could things be rocky? Of course they could be. But there's a lot of reasons to why Tesla should not be here. Their earnings were great, and it supports a higher valuation. Now, hopefully the stock does keep dipping so we can ultimately load up on our positions. That would be a huge win for all of us, and I hope you would encourage if that were to be the case. But in the next 3 to 6 months, you definitely don't want to be short, and I'm sure you wanted 2020, right? Hindsight. You probably wished you would have bought the dip. Now, who knows? If the markets dip themselves, if big tech earnings are negative next week, that could be an even bigger problem. You're definitely not out the woods yet. Some analysts have said on CNBC that the NASDAQ is just doing this special portfolio rebalancing right before big tech earnings. That's probably no coincidence. And, if that's just an ominous sign, it doesn't look too good. So, things could get worse before they get better. Ultimately, Tesla could fall to that 240 level. If the market's absolutely crashed, you could fall back to that 200 or 190 level. But unless you get a big crash in the markets in which hopefully you're hedged out in your portfolios like we are in the trading community, and you'd be just fine and you make a bunch of money if the markets crashed anyways, link down below in the description of this video if you want to join that. Well, I don't think it happens without a major crash in the markets. At least that's my opinion. And finally, the last clip that we're going to look at, this guy says Tesla is undervalued. And this is relative to big tech names, in which he talks about the same things that I have said here on this channel for weeks and months now. Those other names are just not growing, and Tesla continues to grow, even at the size and scale that they are at, and better times are still to come on the road to the most valuable company the world has ever known.
Let's talk about margin. Tesla itself has engaged in a price war that's hit margins. Do you believe this might be the bottom when it comes to its margin story?
Yeah, so that's one of the issues in yesterday's call. The company wouldn't commit. They were very non-committal about seeing a bottoming in margins. We think we're there, so whether it's this quarter or next quarter, they broke this 20% pure gross margin guidance, and right now they're in about the 17% range, and I think that's probably why they don't want to commit to this being a bottom. But if you look forward into Q4, into 2024, we have the Cybertruck ramping, we have additional volumes helping growth, we have 4680 cells ramping, so we think that this particular level probably represents the bottoming process for gross margins.
So George, I'm going to ask you a complicated question, hoping to get a short answer out of you, though. Is Tesla possibly undervalued? Heard a lot of people talking about it. It's actually an AI play that people don't fully realize. Full self-driving FSD, as you mentioned, that's actually AI.
Correct. We call Tesla the AI and sustainability behemoth. We have close to $10 in earnings for 2025. And if you look at that relative to other large cap tech stocks, it's relatively undervalued. It's growing faster from a revenue perspective. It's growing faster from an earnings perspective. And all the stuff that we just talked about create visibility to long-term sustainable growth. So yes, relative to those stocks particularly, we think it's undervalued and underappreciated.
All right, George, with that in mind, give us your price target and your rating.
It's 293 price target, buy rated, that's a 12-month price target. But we think that our multiple, which is 30 times 2025 earnings, is relatively conservative, particularly given the fact that this group of large cap tech stocks, what we call the man group, is trading at 26 times. And I mean, you look at the growth for revenues, it's probably 3 times higher. For earnings, it's a little bit higher than that. So we think this is a relatively undervalued stock.
Yeah, I think that's saying it lightly. Tesla, compared to an Apple, Microsoft, or any other name, just flat out looks undervalued. And that's exactly what we have said for so long here on this channel. When Apple is seeing negative growth year over year, and they're trading at a 40, almost 40 times PE ratio, and Tesla is trading at a 70 times P ratio, but they're seeing 80% year over year growth, and even better growth to their EPS. I mean, just that doesn't make any sense, right? Tesla is undervalued relative to other big tech names. That is clear. So that is going to do it for this video. Hit the like button and subscribe to the channel if you guys want to stay up to date with everything going on with Tesla and the broad markets every single day. As well as that, if you guys want to come trade with us live in real time, fear not. If the markets crash, we are fully hedged out, as you should be as well, especially heading into big tech earnings at the same time the NASDAQ, coincidentally, is doing a portfolio rebalancing just days before your big tech names, your trillion-dollar names, and Microsoft and Apple and Google are all set to report earnings. Little too coincidentally to not be hedged out. That is all for this video. Check out the links down below as well for merch and to get yourself some free stock. But that is it. You guys enjoy the rest of your day, most importantly, and I will see you in the next one.